Hey everybody, welcome. It's March 27th, 2026. This is going to be a private video. I'm not going to publish it on the internet. And I didn't really want two-way because I'm not feeling so hot, but I think it's an important time to do a market review. So yeah, this is kind of what I wanted to see whether we were going to stay above the high volume node on a Friday or break below it, but it was a give back Friday and we broke below it. Notice I was shorting up into this zone because one, we were at a resistance zone and we had two false breakout patterns, three if you count this one. Now we were back underneath it with yesterday's high yesterday's high was the short. Basically this whole range here acted as resistance because we broke below it again. That's the point, from 79.95, 79.95 to 72.244.9. And now I drew this box around it to show that we had two false breakouts, three if you count that one, so we'll call it three, and that we're probably just going to remain balanced again. Now we have broken down into here. I have exited the short because we were at a support zone short term with the hook from extremes. So I'm not saying we can't go lower. Odds are, because we had a bigger picture pattern that we talked about a couple of days ago, actually. I think we talked about it when it first came up here. There was a shoulder, a head, and that there was going to be a shoulder, and then if that's a head and shoulders pattern, we go down. We're also doing it in the context of another type of a pattern, which is a rising wedge. So we have that confirmed, and then we have this action of pullback, which could even be represented by this now. See how that works? Now we're going into these lows where buyers may be active on first test with our shorts, but I do anticipate that this might be a breakdown pattern because we are breaking down with strength out of a balance. So I'm not really excited about going along just yet because I feel that based on where we are on a higher time frame, if we look at the weekly, we are just in the beginning of that death cross pattern, and the Gaussian weekly channel has just turned red, and there's always a period of redness, and it precedes a larger move down. At least that's what happened in 2022, 2018, and 2014, and that's what I'm going to base this decision on. The larger time frame bias is still one leg down, two leg down. It's still down. We're still down because of this pattern, which has been going down since early October. So it's multiple months now. So that is a bigger picture bias. Like the bigger picture bias is bearish. It's only been this short intermediate term that eventually goes sideways, neutralizes where longs were then acceptable for a shorter time frame. Now, a lot of dollar cost average people say, hey, I'm half off of 126. This got to 60. I don't care. Hey, you're 50% off. If you don't mind possibly waiting for a leg down to 40,000, or the time factor of you're having your money tied up, then I guess you can start that. If you want to be a little bit more patient and follow the patterns that repeat themselves, then you would be waiting, because odds are, even when this went up to here, we were starting to short because it had lower odds to work out. Even if we go on a 3-day, just a higher time frame up, you can see how well the visual on this type of behavior, right? Here's a head, here's a shoulder, here's a head, and that's the first breakdown leg of it, right? It's sort of what happened here. Here's a shoulder, here's a head, and here's that shoulder that was weaker than the other shoulder, kind of like a crooked shoulder. Then it has the first leg down. As it's having its first leg down, it starts to consolidate with a very wide range. This from low 25s to high 33s, roughly 28 to 30%. Estimation there, and it's doing so as the golden cross inverts to a death cross. Now, for the entirety of the bull run, this 200 moving average acted as support. We broke it with conviction. See, that's the important point, is that we broke it with conviction, and it starts to then have the slow 200 rise above the fast one, which is the 50 on this one. And that always in the past, and I can mark it in the past here, we can go back in time, proceeded a breakdown. Green, same thing happened here and here. And you can see it breaks down, and then it has to have a time factor, even another leg down. And this is roughly a 50% move from, 33 down to 15, maybe a little bit more. And then once the golden cross happens, sort of a rounded bottom or cup and handle, what have you, then you can get a confirmed entry. But we don't want to wait for that. We want to buy on, fear and weakness. But we also don't want to buy in the middle of a falling knife, because if we look at how the past behaves with another leg down after this death cross. See how this death cross just started? Well, this death cross has to have this separation, and this is a significant amount of time. This is from May to August, May 22 to August 23, not even that year's August. You get what I'm saying? Like, this is a significant amount of time that your capital could be tied up. If you bought around here all in and then waited all the way here till your capital was break even, that's over a year. If you don't mind that, then you would go all in or dollar cost average. If you want to wait for a high probability confirmed major turning point, then you would bet on the probability that we're going to have another leg down, that this is going to behave how it has in the past, that this needs to separate for a while, as it has done every time, and that we are in, the process of one leg down, two leg down, three leg down, and now possibly that fourth, which will then be, the flesh out of it. 1 second, I just want to check on my dogs. All right, good. Don't escape. One of them likes to be an escape artist, so I have to check on. No, I'm not sure why that's going off and on, but so that's the idea. And we were betting on that, even though this was looking bullish as this was coming up, because now we're getting that demoralization. You see how this is very similar in time to this. You see, all balances end in trend. And all trends end in a balance, all trends end in a balance, and then all balances have to end in a trend. I'm betting that the balance is going to be another downtrend based on, like I said, where we are with this death cross pattern, how it's behaved with another or two legs down, significant legs down, 50% or so or more. And, even if you go from node to node, guys, that would take us around to 42. That would be a crazy wick down here. But I think anything, if you could wait till like just another 20,000 or so lower, I just think that once this starts stabilizing, you're going to get that. Remember, even though the first leg down does happen relatively soon, it does take a while for this thing to bottom out. So could even be potentially another leg down as this is going. It depends on how this crashes down. We have to see the volatility and the conviction of how this does it. But remember, as this is resolving, all trends also start from a VPOC. It's not just a balance here. We are at a major value point of control over even past times of September 24, as you can see. So breaking here would be like an inversion of this, and you might see a massive down move even to 42. Then you might start to see some recovery. That's kind of what happened here. This thing started to recover. There was a wide separation, and there was a time factor of significance. We haven't even had that. It's just like we just started this. It's just crossed on us. Now you might say, well, on other time frames, this doesn't work out. We'll just play around with it. All right, this one is on a 3-day. Let's go to a weekly. We also have our own PPT time cycle here, which is a prediction of, May 11th, that there's going to be a strong inflection point. We might have a flash crash, in early April, and then it starts to bottom build, and there's like a double, triple bottom, and then, something like that. That could possibly happen. We have a very strong inverse zero line reject, which is confirming my idea that this was going to be a false breakout rising wedge pattern, which means that this bounce is going to end in a trend and it's going to go lower, odds say. You can even see the momentum indicator starting to turn back. And, this is still bullish, but that's always late, so who cares? But we can look at it like this is, I believe, we can do just different moving averages. This one is a 50. And I was on the other one was a 200, but the other popular one is people use a 21. This is also a death cross using these guys. And you can see there was one leg down, two leg down, three leg down. We're on the first leg down, and there's gonna be a second, maybe bottom building. The third leg down is very small in comparison to this big second one that's coming, where it's like even if you bought on the fear here, you'd still be between 16 and 13. That's still pretty good. You know what I mean? Just you just know this thing's going to be a significant amount of time if it repeats like it did, right? This is all based on the idea that previous market behavior influences future market behavior, so we can see how human behavior repeats because there's nothing new under the sun, right? Death cross pattern here also needed time to separate and mature. This is just kind of started. And it's just kind of started what I think is this first leg down, and now we're consolidating. First leg down, and now we're consolidating. You can see the time factor of the separation is very similar, just from here to here. Now I can go back in time and show you also in 2014 and 2018, but just for the sake of time, you just have to take my word for that. It's not just 1 year or one cycle that I'm comparing here. We can even look at it from a different mathematical perspective. All indicators are really derivatives of price. So once again, just like a moving average, this Gaussian channel is sort of stretching out, or rather streamlining outliers in price to derive something that's more coherent for the human mind to perceive. So, it's basically, while this is red every time it goes up, even though it looks green and scary, this indicator is calming you down. In fact, even though there's a lot of green candles as this is going up, it makes everything, when this turns red, even on, green candles, where this would be going up. Okay, one sec. Shh. Hey, get in here, guy. Josh. Josh. Hey, get it. Hold on. Hold on. Quiet. So, well, sorry about that. So this Gaussian channel is, like I said, streamlining the price. So where are we, right? Well, I believe like we're just in the beginning of the red. But when we were just in the beginning of the red phase, there was a lot more room to go down and a huge time factor. Look at this. Look, and we just started to turn red. Just like when this like had the first big strong leg down, it was still green. Just like when we had the first big leg down, it was still green. It's only when we popped back up into this weekly that this started to turn red. And now this is also starting to turn red, notwithstanding the fact that as this was looking like a breakout pattern, we understand a different type of pattern here, the counterintuitive pattern based on the time cycle that we're in a bear market now, not a bull. Whereas every time this went down, when we were above the Gaussian support line, it was still a bull market. Now that we broke below the Gaussian meridian line with a bearish context, we are now switching from a sideways up market to a sideways down market. As this was popping up, we understand about a false breakout and a rising wedge. And this indicator, the fact that this CCI yellow could not overcome this purple line, and then the turbo went way over, that is an inverse bearish zero line reject setup. We shorted that, because that's what the professionals do. While you're buying, I'm shorting on you. While you're selling, I'm buying on you. That's how we roll. There's always got to be a loser in this game, and the professionals will be on the side of the winners. This is player versus player. But that player is yourself at a computer screen. Isn't that great? There's no one else in the room but you. Shh, Yeti babe, be quiet. Okay. Also, look, double top, double top. That also happened around the double top. So this red just started. So all that, the death cross and the Gaussian, and the fact that this indicator is confirming it, and just our own multiple time frame analysis that we know when there was a trend line break, we broke below it. I mean, it's all different ways of looking at it. Whether I'm using a Gaussian channel, just pure price action and leg count, a trend line to show the direction, or those moving averages like the 200 and the 50. Everything, and then we see that reverses the death cross, or you see it break below the Gaussian meridian line and now below the Gaussian support, and we're standard deviation way below it without this time cycle factor here in place with this other leg down that's coming. You know what I mean? Down here. There are all different ways of looking at the fact that we have higher odds for more bear market, and that will present for the people that are astute and aware of it, one of the greatest reload opportunity cycles on your portfolio that you've ever had. Because after this goes down this much, there's going to mean these institutions want to reload. And I think that there's going to be a crazy pump. And that's when retail will do the same thing that we'll be shocked if they're doing. You'll have the same people calling you to buy on when it's at a double top or when it's making a new high in blue skies. So it's a good time to buy. Bitcoin's breaking out and just made new highs. You'd be like, yeah, if you want to buy mine because I'm selling on it. It's like we're always going to be doing the opposite of that. But it's also more sophisticated than just now it's half off roughly. Let's buy because we understand it's not just a price level, but there's also a price of time. And as income producing traders, we can also have hedges and other types of capital where we can go long and short on these sideways phases. And other people are not making money when it's going down, but us because we're shorting it. So the short hedge is a hedge for your portfolio, an income producing short. But yeah, not looking good right now. If you think about not looking good as bearish, if you think about I can't wait to buy cheaper prices, then you're excited right now and you're happy that I either forced you to get out months ago, or at the very least maybe slow down your so-called dollar cost averaging, which is pretty much the opposite of what we teach for our trading strategy. A dollar cost average strategy is you keep buying as you're losing. Okay. Think about the psychology needed to do that versus what's needed as a day trader. We're getting out very quickly. Our model's fixed on a percent. We don't even really negotiate with the max that we can do. And as your account gets smaller, then the 1.5% of that account would also be smaller. See how it's proportional to your account. And if you're doing well and your account grows, then you can risk more because 1.5% of that account goes up. It's all in the math, and it frees up your mental real estate. But I mean, from a top-down approach, that's why most of our trades have been shorts, nearly all of them, because of this larger time frame top-down analysis, which is very apropos for portfolio managers because we want to also go with the larger time frame bias. That's what that we want to short with the hedge funds that are selling, kind of a thing. We don't want to ever stand against institutional level capital. That's the essence of this system. So it's very counterintuitive, not easy, but it's working. And that's why it's important that if whatever you're doing is working, I would recommend maybe not even adding things to it for the sake of, even if you enjoy that, because if you're really in the trenches and you're trying to make money for your family, you need to really be an expert with your tools, like a samurai. They're not going to just start messing around with nunchucks just because it's fun. They want to get really good with a couple of different weapons like a samurai. So, I mean, the tools that we have, I think there's enough nuance in them and enough contextual probabilities of how they can be put together that make it inherently complex to begin with, because it'll also be at the same time the system is giving you signals, your body will be giving you the opposite signals. Like, oh my God, it's going up. People might be upset because it keeps going up. We should probably buy into the portfolio. No, that's not what we're not going to FOMO because the body's has a fear of missing out. We go into metacognition, and we're just aware that we're experiencing a lower vibrational fear-based state, which is not based in high odds probabilities. We always know we're going to be counterintuitive, so we're probably on the right side anyway. And then you have that one friend that always calls you at the wrong time to buy, so you use him as a contraindicator while not even trying to teach him anything about it because you like what he does all the time for you because he confirms everything that you're doing, the ultimate contraindicator, and then you just go with it. So that's where we are. It'll be fun when I start giving the long signals to start reloading. I don't want to, that will, I think, brighten up people's mood, but that's neither here nor there. We are now launching a trend from a high volume node in a mature balance that had a rising wedge pattern. And if you look at just what the basic classical technical analysis is of a rising wedge, is that it breaks down out of the balance. So that's where the odds are slightly favored now for the bears, that this is going to be a balance breakdown and not a false breakdown. A false breakdown was like every single one of these. Looked like it was going to break down. Looked like it was going to not really this one because it didn't balance yet. That was just a strong reversal. But everyone thought, oh my God, here we go. I'm like, when have you ever seen a market go down and then straight up? notwithstanding the fact that we didn't even break the previous day's high, which is always going to be resistance. So, you have to understand that oftentimes the largest candle that comes at the end of a leg after a couple legs down that's really strong is a sign of exhaustion. You want to see this giant red candle at the start of the breakdown, not at the end. If it comes at the end of the breakdown, then it's more likely to be a reversal. That's one trick. You could file that trick under your prior momentum idea category on your daily call if you want to systematize. If you're like, man, Matt has all these things he pulls out of his hat. Yeah, I have a lot of different tools that I apply that I trust will come to me in a flow, fluid state because I've been doing this for 10 years straight. That's why. You have not. You haven't put in nearly as many hours. I don't even care if you've been doing it 20 years. You're probably a dentist and you do this on the side and come in and this is just a little entertainment for you. Quit your dentistry, put 6 figures in a trading account minimum, and then trade for a living, and then tell me you want to come back and turn this is a fun game for you. Okay? This is not a fun game. This is a war game. This is mental warfare. That's what it is. That's how I was able to call this. You find somebody that called it moment to moment live better on the internet, and I'll shut down PPT right now. Over now.